I'm here today with John Woolfitt, Director at multi-award-winning broker and investment firm Atlantic Capital Markets. John, it's good to speak with you.
Hi, thank you, Alan.
So this is the first of our monthly get-togethers where we look forward to upcoming economic and corporate events in the month ahead. Now, you were quoted by Reuters this week saying that the market is caught in a real battle between recovery optimism and news of increasing COVID cases in certain geographical areas such as the US. How do you expect this to play out during July?
Yeah, so I mean, the battle will continue until the US really gets a handle on it. However, recent data has shown the US economy is recovering. Market moves would also suggest optimism is growing. It looks like the bulls are waking up, and I think once the US gets infections and death rates under control, it could really release some momentum out there.
That's good to know. So we saw, of course, a jump in US job numbers last month. What's your take on this? Is it fake news? I mean, we sort of had some doubts over the previous numbers that have been released by the US. What's your take on this, John?
Yeah, well, I mean, we've seen a further 2.37 million jobs added, really driven by the US stimulus measures. But the revision to the May number was certainly very interesting. A move from a negative reading revised to 3.06 million jobs added. So a swing of nearly 6 million jobs suggests to me that the US recovery really started in June. And what's interesting is the biggest rebounds in employment are in the areas hurt the most. So the biggest increase was really in the leisure and hospitality sector in the US. And it'll be interesting to see if that momentum is maintained.
That's interesting. So of course, here, closer to home in the UK, it's a pretty depressing picture, despite the Boris the Build measures, or Boris the Builder, as he's now known. It looks as though it's set to continue through July. So you noted the recovery in leisure stocks in the US. What impact do you expect Boris's measures to have on the markets here in the UK?
Yeah, well, we've already seen swaves of job cuts, really, due to obviously coronavirus. I mean, BP, Shell, Rolls, British Airways, EasyJet, and a lot of the retailers as well, Debenhams, Mulberry, Oasis. So, I mean, amongst them all, they've cut to the tune of over 50,000 people. Now, hopefully this will be short term. We'll start seeing increases in employment rates, much like the US, as business returns to normal. There are also pretty specific sectors. The oil sectors had the sort of perfect storm of obviously the impact on the oil price, as well as the coronavirus crisis. But I think, with the FTSE 100 really mainly weighed to international companies, the recovery could take a bit longer than the snapback in the US, largely because a lot of these companies are exposed to the global economy rather than the domestic economy. So the global recovery will have more of an impact, I think, on the FTSE than it has on the Dow, really. Okay,
that's good. So obviously you mentioned leisure stocks in the US. Do you expect leisure stocks in the UK to start to recover during July?
I think, it's all going to be hinging upon how we come out of lockdowns and how the numbers carry on. But I think if we can prove that we can come out of lockdown sensibly and cautiously, then yeah, I think a lot of the groups like Whitbread or Cineworld or these sort of companies that have obviously felt the brunt will naturally come back into play.
Good. Okay. There have, of course, been some winners during these unprecedented times. The COVID index, of course. Are you recommending these COVID stocks to your clients? Obviously, Novacyt's been a big winner. I noticed there was something on the Atlantic website, or some reports on the Atlantic website about Novacyt.
Yeah, so I mean, back in February, we did highlight Novacyt, Novavax, and a few others to our clients, and also those that subscribe to our research centre. These have had a fantastic run. And even in the main 100, we've seen AstraZeneca do fantastic things as well. But I don't see as much opportunity there now. We see more companies coming into the ring. The swings have become more vulnerable. moves a little bit less certain. So we try to position ourselves, ahead of the curve. So we're not chasing these stocks now. We're more focused on the stocks that we feel are more primed for recovery, rather than those that are vulnerable maybe to tomorrow's news. Today's vaccine testing for one company could be fantastic. Tomorrow, someone could do better. So we're trying to get ourselves ahead of those moves and looking forward from here, really.
Okay. So on the corporate front, then, reporting season is over now. There's relatively little news around this month. Has anything caught your eye that's upcoming in July?
Yeah, I think Royal Dutch Shell, their trading update at the end of July will be interesting. It'll be interesting to see how the sort of rout in oil has translated to the profits, and equally the measures they've made to sort of counteract it, and how that flows through. And also, I think we've got some data out from Hutchison, China, Meditech as well, with interims at the end of July, which will also give a good insight into what's happening.
Good. Okay. So, of course, Atlantic Capital Markets, your dealing team there, and of course your client base, you must have a constant insight and ongoing resource of trading ideas and strategies. Can you provide some examples for us?
Yeah. So fundamentally, we'll always be trend followers, and that's not just on a technical analysis side. That's also spotting market trends. Sector strength, and at the moment we're following recovery trends as we come out of lockdown and certain sectors start to come back into business. We've seen certain retail stocks, mainly the ones with a strong online presence, do very well. Construction and building, as building sites start to open, and also some of the financial companies have also started to wake up. But then there's also the more what you might define as boring, but I'm certainly a fan of Croda and Bunzl, who have had fantastic runs through all of this. And there's something that we'll always stand by here at Atlantic, and that is that boring profits are better than exciting losses. So it's certainly looking for those trends. We're not quite brave enough just yet to move into travel stocks. There's still a lot of volatility there. So it's an area we've got on the watch, but not quite brave enough to commit just yet.
Okay, well, of course, we spoke about On the Beach, didn't we? There was that trading call. That's probably the exception, I think, because they're a rather different travel company, and they're very much geared up for the environment that we're all living through now.
Yeah, I think they're positioned differently. I think when I sort of say travel, I'm looking at the airlines.
Yes.
Obviously, TUI Travels had quite a rapid amount of swinging, but as the airlines sort of start to come back into play, they'll be interesting to follow. But obviously, the more time planes are grounded, the heavier the dent is to the overall revenue. So it'll be interesting to see.
Sure. Okay. Well, John, we're running short on time. Before we go, can you provide some key takeaway trading ideas to help traders and investors during July?
Yeah, sure. Fortunately, we offer our clients live real-time text alerts. It helps keep them informed on what's happening in real time. In the current market, responding to data is even more key. Keep your eyes closely focused on the economic data. It's more relevant than usual, mainly as we monitor the global recovery. But I think something that's sort of come out a lot over the last month is really don't panic on anything too bad from the US. It would seem at the moment that any scary data is almost immediately offset by the Fed or more easing from the Fed. And I think Boris's build should offer strength to infrastructure, construction stocks. As we touched on before, the leisure sector will start to recover as lockdown is eased. So companies like Whitbread, Intercontinental Hotels will start to recover as restrictions lift. But I think above everything, it's a case of closely monitoring COVID rates. I think the recovery will largely be led by continued control on numbers. And, obviously any sort of flare-ups or concerns of numbers increasing again could easily just weigh on the market in the short term.
Of course. Well, John, it's been a fascinating insight and look forward into July. It's been good speaking with you. Let's catch up again at the start of August.
Great stuff, Alan. Now it's been good talking to you too, and look forward to speaking to you again. Okay. Great stuff.